This is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian is President, Midwest Market Solutions, and online at MidwestMarketSolutions.com. At the end of the session, we watched corn move higher for the fourth straight session. About beans, well, we saw double-digit losses pretty much across the board in beans. Soy meal lower, bean oil lower, wheat market in the red as we finish off the session, ending some streaks here. For Chicago, they had two straight sessions higher in the wheat market, but probably the more impressive run has been Minneapolis, higher for 7 straight sessions before the lower turn on Wednesday. Again, Brian Hoops here to help us understand what happened. And Brian, flash sale reported for corn as we started the day. Unknown destinations, 5.1 million bushels. We've had a few sales here as of late.
Hey, Tony. Yeah, they reported that pretty late. We didn't talk about that on TV this morning because it didn't really be reported until closer to 8:30. But it was 130,000 corn sale to an unknown destination this morning. That's the third sale of corn this week. And, so very supportive to that corn market. Corn was the only thing to close higher today, off of its session highs. But that corn sale, I think, gave us a little bit of support. The EIA report, the ethanol production numbers, they were down quite a bit from last week's levels, but still up slightly from last year. So not a real friendly report either. But it was good to see that the corn market making some moves here to the plus side, despite producers making good planting progress and having a very open week in the middle of this week. A lot of producers out there running in the field, and then get some rain on top of that. We got a feeling a lot of the clients may be done or close to done with their corn at the end of this week. And so it's just very strong corn market despite the fundamentals here of planting, which probably tell us we should be working our way lower into the end of the month rather than higher. And so we did see soybeans set back without any export business, and I think that rumor proving false that we talked about this morning. Soybeans closing sharply lower, well off session highs, failing that resistance, and actually posting an outside reversal lower close. So a very interesting day, I think, from a technical standpoint for the grain markets.
Okay, and another market that lost, it'd been higher 5 straight sessions. Nice little run for the cotton market, and we saw quite a setback on Wednesday. We don't normally get a chance to talk about cotton, but have you kind of had an eye on that?
Yeah, absolutely. Keep an eye on that for our cotton producers. And we have some cotton grown in southern Missouri, and all throughout the South. A lot of those areas have had some decent rains, and that's what is starting to pull this cotton market back off its highs. That cotton market had a pretty nice run from 68 all the way up to 82, and once some of these rains were in the forecast, and now we've seen a reversal of fortunes here. Outside day reversal in the December cotton as we made new highs above 82, closing right at 80.16 today. So a nice run, probably gave the producer a little incentive to go ahead and plant the cotton because the prices had moved up enough, and now we may start to remove some of that premium. That's what the market does. It gives, dangles that carrot out there for the farmer to plant corn or soybeans, and in case of spring wheat where we have acres expect to be down, rally some new highs, maybe some contract highs, and dangles that carrot out there. There is some profitability if you plant this crop. I feel it's what happened with spring wheat, what happened with cotton as well. And now once we get that crop planted, you start to take that carrot away or pull that incentive back.
Yeah, I mean, there's a lot of different directions you could go. The idea of the carrot is one. Another one being, one of the competitors, the competitor to cotton is man-made fiber, and that uses crude. And anytime you run crude up over $100 a barrel, makes polyester and those man-made fibers, spandex, even more expensive. So there was some thought that maybe some demand coming on the heels of that. Speaking of the energy markets, higher again across the board. WTI higher for the third day, RBOB higher for the third, diesel higher for the third, and nat gas moving higher for the fourth. Are we just going to trade headlines?
We kind of have been. You know, the EIA report that came out, we talked about ethanol production being down a little bit, but crude oil stocks were up 1.9 million barrels for this week. Trade was expected to see a decrease of stocks, and so our 5-year average of crude inventory, we have a surplus over 11.8 million barrels, and that's just last week we had a surplus of 6.2 million. So it's a pretty big, sizable jump in our surplus inventory. You know, that comes despite the fact here that we're producing and shipping a lot of it out, but I think just the production is starting to ramp up so much that we have this oversupply, and that's what concerns us about nat gas as well, is as prices stay high for crude oil, when you produce more crude oil, you end up producing more natural gas by default, and that's a market that's already containing with big supplies. And so, yeah, we have a lot of supplies here of crude oil. We may see, you know, eventually crude oil prices weaken, but here for at least for the middle of the week and into the weekend, we're probably looking at higher energy prices.
And here's what's all kind of interesting. Roll the clock back 6 years ago. This was 6 years ago on Monday, so 6 years ago in a couple of days, that crude market hit $37.63 negative. Yeah, below zero. They were paying you $37.63 to take a barrel of oil. Our guest today is Brian Hoops. Brian's with Midwest Market Solutions, online, midwestmarketsolutions.com. This is Commodity Wrap.